The year is 1998, and the dot-com bubble is in full swing. A new startup launches called Confinity. It's an online payment platform that allows users to send and receive money over the internet. They quickly gained traction with college students who are looking for an easy way to split bills. But as the company grows, they begin to expand their services to include auctions, personal loans, and even stock trading. In fact, it was through this platform that Elon Musk made his first foray into the stock market at the age of 18. By 2000, the company had 4 million users. And just 2 years later, it merged with another online payment platform called XCOM to create a large online payment platform that would go on to be known simply as PayPal. Since then, PayPal has grown to become one of the largest online payment platforms in the world with over 429 million active accounts as of 2021. But what many people do or not realize is that there are actually 3 companies behind the scenes that control everything. So let us take a look at how these 3 companies control PayPal and how they've managed to create 18 billionaires in the process. Taking a look back, the story of PayPal traces back to December 1998 when Peter Thiel founded an online payment platform called Confinity while working out of his parents' home in Palo Alto, California. The idea came to him after he became fascinated by the technology behind secure online transactions and saw an opportunity to create a more convenient and efficient way for people to send and receive money over the internet. The initial product was a simple to-use web-based payment platform that allowed users to link their bank accounts or credit cards and transfer funds with ease. This was groundbreaking at the time as it eliminated the need for people to carry around checks or cash for everyday transactions and provided a more convenient and efficient way to conduct financial business. Initially, the target market for Confidence was consumers who were looking for a quick and easy way to pay for goods and services online. However, as the platform gained popularity, the company began to expand its services to include other financial products, such as auctions and personal loans. One of the earliest adopters of Confidence was eBay, where users could use the platform to pay for items they bid on at auctions. This partnership proved to be mutually beneficial as eBay gained a secure and reliable payment option, while Confidence gained exposure to a large audience of online shoppers. Additionally, the company also began offering personal loans to help people finance large purchases or consolidate their debt. This diversification of products helped Confidence to establish itself as a comprehensive financial services platform rather than just an online payment option. As the dot-com bubble heated up, so did the growth of Confidence. By the year 2000, they had accumulated 4 million users. But this growth came at a cost. To fund its expansion, the company had to raise capital from venture capitalists, which diluted the ownership stake of the founders and early investors. Despite these challenges, Confidence continued to grow and eventually merged with another online payment platform called XCOM in 2000 to create a large online payment platform. XCOM was founded by Elon Musk as an online payment platform that allowed people to transfer money directly from their bank accounts without the need for credit cards. The merger between Confidence and XCOM created a large payment platform that offered a wide range of financial services, including online payments, auctions, personal loans, and stock trading. The platform became known as PayPal and was launched in February 2001. In the years that followed, PayPal continued to expand its product offerings and global reach, becoming one of the largest online payment platforms in the world. One of the key factors behind PayPal's success was its ability to adapt to the changing needs of the market and embrace new technologies. For example, the company was early to recognize the potential of mobile payments and launched its mobile payment service allowing users to pay for goods and services using their smartphones. PayPal has also invested heavily in developing a comprehensive platform that provides businesses with the tools they need to accept online payments, manage their finances, and engage with their customers. Overall, PayPal's commitment to innovation and customer focus has been instrumental in its success and has solidified its position as a leader in the online payment industry. As we can see, PayPal's history is filled with many successes and milestones. However, PayPal's journey has not been without its fair share of obstacles and controversies. The company has faced criticism for its fees and policy, as well as for its involvement in various high-profile fraud and security breaches. Nevertheless, PayPal has worked to address these concerns and has implemented measures to improve its security and customer support. Looking ahead, PayPal is poised to continue its growth trajectory as the demand for online payment solutions continues to rise. The company's strong financial performance, innovative product offerings, and global reach make it well-positioned to capitalize on emerging opportunities in the industry. As such, PayPal is likely to remain a dominant player in the online payment space for the foreseeable future. But if we take a look behind the curtain, we'll find that PayPal isn't nearly as powerful as it seems. To understand how this works, we have to take a look at PayPal's organizational structure. While PayPal operates as a single entity, it's actually owned by a parent company called eBay Inc. eBay is a massive online marketplace that connects buyers and sellers from around the world. And PayPal was acquired by eBay back in 2002 for $1.5 billion. Now, the acquisition made sense for both companies as eBay users could easily use PayPal as a payment method within the marketplace. Over the years, PayPal became the default payment method on eBay, and most eBay users never even realized that PayPal was a separate company from eBay. Now, since PayPal was acquired by eBay, eBay now owns 81% of PayPal and PayPal owns 14% of eBay. This means that PayPal is essentially a subsidiary of eBay, and its fate is largely tied to the success of the larger parent company. Some people argue that being a subsidiary of a larger company like eBay has actually been good for PayPal because it has provided stability and a steady stream of customers. On the other hand, some argue that PayPal has become too closely associated with eBay, and its image has suffered as a result. What's your take? In any case, eBay is ENT public and is currently undergoing a spin-off where it will be split into two independent publicly traded companies, eBay.com and PayPal. Once the split is complete, eBay will own about 15% of PayPal, and PayPal will own no equity in eBay. So PayPal will no longer be a subsidiary of eBay and will operate as an independent public company. This split has been in the works for a couple of years now, as both companies have realized that they'd be better off pursuing their own independent paths. eBay wants to focus on growing its marketplace business, while PayPal wants to focus on expanding its financial services. But this isn't where things end. If we dig a little deeper, we'll find that both eBay and PayPal are ultimately controlled by a holding company called Silver Lake Partners. Silver Lake is a private investment firm that specializes in investing in technology companies. They have a majority stake in both eBay and PayPal, which gives them ultimate control over both companies. In other words, Silver Lake is the puppet master behind the scene. They be the ones who make the big decisions regarding how eBay and PayPal should be run and what direction they should take. So in the end, PayPal isn't nearly as independent or powerful as it may seem. It is tightly controlled by a parent company called eBay, and that company itself is controlled by a private equity firm called Silver Lake. So who are the winners and losers of this arrangement? Well, the founders of PayPal, including Peter, definitely did unlike this outcome as they lost control of the company they built from the ground up. In fact, Peter Thiel has been trying to buy back PayPal from eBay since 2018. He says that he is willing to offer $17 billion plus a 46 premium for eBay to buy back PayPal. But eBay's board rejected his offer because it wasn't high enough. Thiel is currently the largest individual shareholder of PayPal with a stake worth roughly $3.5 billion. So he still benefits from PayPal's success, but he doesn't have the same level of control that he once did. On the other hand, the executives and employees of PayPal have likely done quite well for themselves. Since its founding, PayPal has created 18 billionaires between its employees and These include Elon Musk, Peter Thiel, Max Levchin, Luke Nosek, Ken Howery, Yu Pan, David Sachs, Jim Andreessen, Scott Bannister, Douglas McLaughlin, Christopher Young, Thomas Hernandez, Paul Shao, Michael Grimes, J.S. Powell, Mark D. Lewis, Jeffrey A. Weiner, and Daniel J. Of course, some of these names might sound familiar, like Elon Musk, Peter Thiel, and Max Le. They were some of the earliest employees of PayPal, and their stakes have grown significantly since then. Elon, for example, owns about 87 million shares of PayPal, which is worth about $6.2 billion. But Elon is probably more interested in his other ventures, Tesla and SpaceX, which are both public and much more volatile than PayPal. But what about the average investor? Well, PayPal has been a decent investment for the average investor as well. If we take a look at the stock price, we can see that PayPal went public in February 2002 at $13 per share. From there, the stock price remained relatively flat until the financial crisis hit in 2008. During the financial crisis, PayPal's stock price crashed along with the rest of the market, but this turned out to be a great buying opportunity for those who were able to stomach the volatility. Since then, PayPal's stock price has skyrocketed over 1,000%, and it's now worth $228 per share. All things considered, PayPal is a great example of a company that was able to capitalize on the shift to online payments. Their innovative products and acquisitions have helped them to grow rapidly and create massive value for shareholders. Only time will tell what the future brings for PayPal. But it is safe to say that it will continue to be a major player in the online payment space for years to come. Do you guys own PayPal stock? Comment that down below. Also, drop a like if you're bullish on PayPal. And of course, consider checking out our international channels to watch our videos in other languages, and consider subscribing to see more questions logically answered. But until then, I'll see you guys on the next one.